Hi, this is Randy Finney with Right Side of the Chart, and today is October 21st, 2016. In this video, we'll take a look at the casino stocks. I think it's time to bet against the house, meaning a lot of these stocks look ripe for corrections, and quite a few. I've actually started scaling in today personally, taking about, so far about a third, maybe almost half of these names I'm going to go over. There's not many. There's quite a few stocks in the, casino and resort sector. But I'm going to go over, looks about a little over a half dozen, maybe 9 or so stocks here that stand out to me. And first one I'll go through in order of market cap. You can see a watch list here for resort and casino stocks. So I have these sorted by market cap. And we'll cut it off around the actually, no, I take that back. I'm not sorting this list by market cap at this point in time. These are the names that stand out to me. So there's various size companies here. Some of the bigger ones here we'll start out with. That's Las Vegas Sands, LVS. Just a nice, clean, well-defined uptrend pattern with negative divergence. Forms this large wedge pattern. You have divergence here. I'm sorry, resistance. If you look to the left, you have quite a few reactions, and that looks like an objective short entry on a break down below this trend line, which we may crack. Remember, it depends how you trade. A lot of times, if you're trading the daily charts, you want to wait for either a confirmed daily close below. You can see the other day we just kind of whipped down intraday. If you really zoom in, you can see the bottom of that candlestick below, and prices closing right about on the trend line. And then we're starting to crack again. And a lot of these I'll put up, or I should say some of these I will put up as official trade ideas. Can't put them all. It's hard enough for me as it is now to track all my trades personally and multiple accounts that I trade in, and then keep them up on the site. And that's why I throw out a lot of unofficial trade ideas, and also why I do these videos. If you, whether you're a professional or a retail trader, you want exposure to the sector. The best way to do it, if you have the time to monitor a portfolio and you have enough money to diversify amongst many names, you have the same benefits of an ETF or a mutual fund. And one reason I'm not going over the entire sector is some of the stocks actually don't look so bad, but overall on balance they do. I think there's a lot of opportunity, and again, by diversifying among several names instead of picking just one, you minimize your risk. Or mitigate that risk in case that one trade doesn't play out or the stock happens to gap against you. So, all right, let's dive into the charts. I'll go over my favorites, and like I said, some of these will certainly make it on the site as official trade ideas. And there's Las Vegas Sands. I haven't put the levels. You can replicate this on your own chart. If it becomes an official trade, I will most certainly add the suggested price targets and suggested stop levels. MGM, another very nice, clean, bearish rising wedge pattern. You can see the uptrend line. We had a brief breakdown the other day, but that also hit support. You have this support line here, support level around 25.20-ish. And so the stock broke down, grabbed support, snapped back up in there. But it looks like it's only a matter of time. In fact, you can even look at a minor uptrend line right here. Really well defined. That probably shows through on the 60-minute charts. We broke down below that, and once this daily uptrend line cracks, and especially that support level there around 25, it's showing here 25.19, give or take, so call it 25.20-ish. That one looks good. And let's see, we'll take a look at a 2-day period chart. You could see on that daily chart that I was at, this yellow downtrend line comes in. That was a bullish breakout. That goes back. Now I just jumped over to a 2-day period chart. If I don't make mention of what time frame I'm talking about, you can see up here in the upper left-hand corner next to the ticker symbol, the time period of the chart. And on TC2000, this software, one of their limitations is they only go back on a daily time frame. You can only go back 2 years. So I'll jump to a 2-day chart just to show you 4 years of price history. There's a downtrend line, bullish divergence at the lows right there, and that led to this rally. But now that rising wedge pattern that I just showed you on the daily chart, it also shows through here. You can see the negative divergence in the wedge, and again, there's some resistance, quite a bit of resistance there that the stock has run into, and you can see it clearly as I put the horizontal line. So that's another one I think looks poised for a drop. Those two I haven't taken yet. That's but again, I may add those on as official trade ideas. They're certainly large cap, multi-billion dollar companies. This is Wynn Resorts, another big one. And on Wynn, you can see this ascending price channel defined by these white lines, parallel white lines. The stock is working its way up, although while it's working its way mostly sideways, slightly upward, it's slightly ascending. But you can also see down below you have negative divergence as these prices are working their way up slightly higher. You have divergence on the MACD, divergence on the RSI. And you also have horizontal resistance. There's a resistance zone here that runs up to about 108.70. When you look at this downtrend line here, we might be able to see that better on the 2-day period chart. Yeah, I'll go back a little farther. You can see a downtrend line there that was recently taken out. I think I had it drawn like this on that 2-day period chart. So there was a bullish breakout, and there was a divergent low at the bottom there. So that played out for a move that may or may not be all that Wynn needs to play out. If you really take a look at the wedge, measure the wedge. Let's do that right now. You take the widest part of a wedge pattern, add that to where it breaks out, and that gives you an approximate target. So like I said, this one may have played out to the extent that it needs to, and either way, it's within a channel. So there's only two ways, in my opinion, to trade this stock. You don't short it yet because you want to wait for a confirmed break below the bottom of the channel. But a lot of traders can trade successfully within price channels. This one's getting a little bit long in the tooth, meaning it's probably going to break sooner or later. But when you start to recognize a channel, then you short at the top of the channel, and you can cover either at the midpoint or on a pullback, depends on your time frame, and you go long at the bottom of the channel. So long, sell, short, cover, long, sell. You get it. Pretty easy. Good stuff. There's the target right there. If the bottom of the channel breaks, I think this one easily goes down to the just over $78 level. And again, that's Wynn. Let's take a look at a weekly chart, see if anything stands out. It does. This chart says a lot to me. Way back here in 09, we had a beautiful, big, powerful inverse head and shoulders reversal pattern. That one played out and then some. And the stock trades well to the technicals. You can see these charts. You can see this ascending price channel breakdown. This is what I wanted to highlight on or focus on right now, this weekly support. This was a weekly target. In fact, the last time we traded Wynn, last time I posted anything about Wynn was back in 2012. We shorted this one, I believe, on a break of that channel. It was good for a 28% gain. We hit the final target. That was back on July 18th, 2012. And since then, I've just stayed away from it. But you can see the stock trades pretty well to the technicals. You had a divergent low here and a rally, but that's a pretty well-defined level. When I go back in time, I can see the top of that level, 89. The bottom there is about 84.66. I can see a lot of reactions. Reactions from both above and reactions from below, even reactions back in that bull market back in 2007, 2008. So if Wynn cracks below that on a weekly basis, and there's a good shot that it has negative divergence on the weekly time frame as well as the daily time frame, which shows here. I think the casinos have a good way to fall. All right, next one up is MTN. Let's go back to a daily chart, look at MTN. This is Vail Resorts, and a nice clean uptrend line you can see here. Pretty well defined. You have a horizontal support / resistance level it's danced around in recent weeks. You can see all the reactions from below and above. That's around 158.30. So this one looks like an objective short here because it recently broke down below this uptrend line, came back up. It hasn't back tested that trend line yet, but it is back testing this 158.30-ish support resistance level, which again you can see all the reactions from below. Once it got above, that area was support, broke down below, and so far it's failed on every attempt to get back above. So you have a combination of a trend line break and a bounce back to resistance. If it takes that out, we also have the MACD now in bearish territory, although it's poised to make a bullish cross, so may want to go up and back test. That one again, it's not one that I took yet. I'll hold off on that one. But I'm on watch for a possible short entry there. Here's a weekly chart. You can see an uptrend line that if and when that uptrend line goes, this one probably has a good way to fall. but it's still above that uptrend line for now. BYD, this is Boyd Gaming Corp. There's a minor uptrend line to watch. A break of that uptrend line will most likely bring us down to this trend line here. This one's going to show a little better on a 2-day period chart. So let me flip over there. Okay, here's a 2-day period chart. You can see at this point where the crosshairs are, that was a divergent high. Prices made a higher high with the MACD, RSI making lower highs. So this stock has already put in a divergent high and has been moving lower since. Pretty well-defined trend line, which it's just now close to testing, and that was the same one we looked at on the daily chart. It may have come in at a slightly different level there, but a break of that level, and there's also some horizontal support around this area, could very well bring this stock down in time. Probably take months to get there, but around $14.85, so almost the $15 level would be my expected move, or a longer term target for BYD, which is a decent drop from where it is now. That's all the way down about 20%. So again, divergent high, just like you had a divergent high back here. These divergent highs, I always say there's nothing 100% accurate in trading, but these are the things I look for. Trading divergences along with trend line breaks. If you can add that in there, you see a nice uptrend line. You have a rising wedge pattern, divergent high, and the stock played out for a drop from this point all the way down here. That was, well, I can't grab it or it'll move the trend line. I have to go to a different board and show you that drop was spanned, let's see, time wise that was a year, and it dropped about 40%. So these are the things I look for, and when you get out to the longer term time frames, it really helps to kind of put things into perspective. Let's see if there's anything on the weekly chart on BYD. Yeah, you can see there's a downtrend line. The stock acts well to the technicals. You can see a breakout, which was bullish. Prices ramped up after it took out this pretty well-defined downtrend line. You had a divergent high back here. That was the one I just highlighted with that drop that took a year, about a 40% drop. Here's fast forward all the way a couple years later. We're at another divergent high. Very steep divergence on the RSI, just as there was back here, divergence on the PPO, and more importantly, this divergent high, even though that was a 40% drop or so, it came early on in a bull market. Now we're at the tail end of any bull market as far as historical durations of bull markets go. And this one also was just a reversion of mean. When we broke down here, it brought us down to this trend line. Now we're dancing on this primary uptrend line, which really comes off the late 2012 lows. So a break of this uptrend line would be very bearish and more than likely give us even a bigger correction than the one that we had back there. So, I say that because a lot of these trades, if and when the broad market rolls over and if the primary downtrend is confirmed, I may very well extend these targets. And when shorting, you can put a short trade on and treat it like an investment or a trend trade. In other words, a trade that can last for not just a few weeks or a few months like our typical swing trades, but you can have a trade that goes on for months or even a year or more if you can confirm and help confirm or likely identify a primary downtrend, or in other words, a bear market in that stock. And like I said, I think the case can be made in Boyd Gaming and a lot of these other ones. Okay, a couple more to look at. Caesars Acquisition Company, the symbol is CACQ. Here's a nice rising wedge pattern. We're still well within that wedge pattern. If it breaks, this is just a minimum target around 1091. I think after 1091, it goes down here, which is roughly 1013. But you can see the divergence, negative divergence, confirming that rising wedge. I can't ask for much else. Looks like a pretty nice setup. Next one up, Isle of Capri Casinos. I should call it Isle of Crappy because it's a crappy looking chart to me. Now, yes, this stock recently broke out to new highs or new multi-year highs, possibly all-time highs. I'll take a look at the weekly chart here in a second. But what I'm looking at is I highlighted this area right here. That is setting us up for a potential island cluster reversal top. We've gapped up, large gap up above the previous highs. We're coming to back test those highs. to see this stock gap down below this level here, roughly 2130, right about right where the stock is now, especially a gap down would be very bearish because that would leave this cluster, or what they call an island cluster. And island cluster tops are some of the most reliable reversal patterns, meaning not just good for a short-term trade, but for a trend reversal. The stock has been in an uptrend for years. Yes, we had some corrections along the way. Now, even if we don't gap down below there, a simple break, an impulsive break and close below that level is certainly bearish as well. You have two reaction highs here. You had a double top high, which we finally gapped above. We've come back to back test that, which, you know, it's from the bullish case. That's to be expected. You know, pretty strong gap up and breakout. But if this stock has some legs, then it's going to go from here. It should hold that back test and move back up. If not, just as with any other gap, once gaps are entered, they're usually backfilled. And this one has a lot of backfilling to do. I mean, technically the bottom of the gap is all the way down here, you know, around the $17 level. I do have pretty meaningful support here, so that would be my initial price target. And let's just try to quantify that for you. So we're at 2130 right now, drop down. This level's at roughly 1920. That's a 10% drop right there, and that would be my minimum target on Isle of Capri. Let's take a look at the weekly chart, and here's a couple things that stand out to me. From a weekly time frame, you have some very powerful negative divergences in place. That's shown here as prices make a higher high. Here's an uptrend line to keep an eye on. There's that possible island top. You know, like I said, big backfill below. The divergences are, you know, tell me that the next meaningful trend in this stock going forward, I'm talking the next, let's say 20% or more, is more than likely going to be to the downside, as divergences often, you know, foreshadow a trend reverse. This is just it means the momentum is waning and the trend is likely to reverse as long as these divergences are in place and not burned through. Burned through means that this goes on, the PPO makes a higher high above this previous high, so does the RSI. A couple other things to note, you notice these circles here. Well, this shows you extreme overbought readings, and this is a 10-year weekly chart going back a decade. And there's only been 3 times in the last decade where the stock has been this oversold. We had a slight, I should say overbought, that's above 70. A slight, very fleeting overbought reading. It's still, even if you want to count every single overbought reading, let's go ahead and play that game. We'll put a little circle there. And so simply if you short these overbought readings, now, and I'm also playing the game from peak to trough. It's not always so easy to short the highs and cover the lows, but just to point out how much these moves are, we're looking at a log scale. I use log scaling. That's a 42% drop. Log scaling over here. If you don't use log scaling, the chart looks a lot different. Always use a log scaling on a weekly chart. That's my strong preference. All right, so here's the other overbought reading back then, and from that point, I have to move that away. From peak to trough, when you were looking at a roughly 73% drop that spanned 2.6 years. Fast forward to that one, I just covered that drop. This was our last time we had 2 consecutive. We stayed overbought. This was just an extended overbought reading. That's why I have the circles like this. And finally, the stock caved, and that was a 47% drop. So what I'm trying to get at here, guys, these are huge gains. These aren't just 3-5% trades. A lot of the trades that I do on the site are double-digit returns. That's what I target. And so here we are. We've come full circle again to an extreme overbought reading. But what's even more bearish this time around, we have strong negative divergence. We didn't have negative divergence on any of these other overbought readings. So you have overbought with a divergent high, which tells me this stock can easily, if you have patience, and the market rolls over and helps to confirm, I could easily see the stock going down to this 1070 level, and that's a drop of about 50%. You know, so the stock's going to get cut in half, and there will most certainly be, even if my scenario plays out, there'll be stops along the way, and that's why I list different targets. Some traders like to book quick profits. Some people don't have the patience to hold out and ride out the counter trend rallies. If you get a 50% drop, I can tell you right now there's going to be 10, 15% counter trend rallies along the way. Some people aren't comfortable trading like that. Now, what I often do is micromanage a long-term swing trade. I'll cover, we hit there. You can see an intersecting support level or support levels, an uptrend line plus the bottom of that gap right there, or really price resistance. Again, the gap was a little lower. So that's a key target level, that 10% drop I talked about. So you can cover there. You probably get a reaction, meaning a bounce off that uptrend line. Then you break, and then you reshort. Ideally, you short on the bounce. If you believe the stock is going down, a more conventional / conservative entry would be to wait for a break of that level. I would probably rather short the bounce back into resistance in anticipation of a break of that level. So it's very possible, and I've done this many times over the years. If I'm looking for a 50% stock drop in a stock, I can get 80, 90, 100% return on that investment by gaming these bounces, covering, avoiding not only avoiding the givebacks on the bounces off each of the levels that I expect reactions, but also reversing from short to long if the charts confirm. That means there's a lot there. You have to look at the intraday charts at the time, the daily charts. You have to look at the sector, the market. If the broad market's breaking support and looks like it's heading a lot lower as IL gets down here, I wouldn't reverse that trade. I'd just sit tight on it. But if it looks like the broad market's at support due to bounce, as IL comes down and hits one of my price targets, then I will cover the short and reverse to long at the same time, trade the bounce, and then get back in short. All right, so that's, again, one of my favorites right there. A lot of potential in that one. Another one of my favorites, this one I'm currently short, is ERI. Well, I'll go back to that. That was a weekly chart. Let's jump over here to the daily chart. This one, I shorted this break of 1334. It's sort of in no man's land right now, so there is some minor support here as well. I might, if I can get an objective entry out there posted on the site, I may add that. I think it needs to take this level out around 1250. First stop here is 1163, and then ultimately this one can work its way down. I mean, there's a lot of downside in these stocks, and once again, especially if the broad market rolls over. That means if the broad market rolls over, we're heading into recession more than likely. You go into recession, these casino stocks aren't going to do good. They're doing good right now because there's free money. They've been borrowing at next to nothing. Fed's been juicing the economy, so they've been the beneficiaries of that. But as soon as the economy slows and takes a dip, you're going to see their revenues really start suffering. All right, this is a weekly chart on ERI, which, by the way, was Eldorado holding company. Nice, clean, bearish rising wedge. I mean, it doesn't really get much better than that, in my opinion. And again, a weekly chart. So this, you're confirming it with divergence. Looks like a buying climax here. Strong negative divergence. Minimum target right there around roughly 1153, 852. And before all said and done, again, notwithstanding the minor reactions and bounces along the way, I think there's a good shot that this one can head down all the way to that level. That's a very key support level. And that would be a drop of, if we got there in the next year or so, 54%. So, a lot of these stocks I'm looking to see them cut in half. And that's not, and I know that may sound dramatic to some of you if I haven't traded a long time. That's not it's not uncommon, especially for these casino stocks. I mean, here's a drop back here, a 50% drop. That was during the bull market that we're in right now. There's a 60% drop, again, within the bull market. This is when the bull market began back in March of 2009. So I already showed you a couple 50% drops. There's a 71% drop. So, in swing trading, don't underestimate, what a trade can do. But as I always say, take profits where you're comfortable. But I see big potential in these, and that's why I'm doing the video, to try to really impress upon, the points and what I'm seeing out there and make the case, the longer term bearish case, and we'll go from there. MCRI, this is a weekly chart. Bearish rising wedge. I don't have the divergence drawn out, but you can see it down there. You can see the prices wedging higher while the indicators are not keeping up. You can actually draw divergence from that point as well. You had a reaction high there, so your more powerful divergence. Also, you can see it on the RSI. So very powerful multi-year divergent high, well-defined uptrend line. So break below that uptrend line. I don't have the targets marked up on this one yet, but it wouldn't surprise me to see this one get all the way down here to about the 1339 level, which again would almost cut that stock in half. But there'll be stops along the way. Let's look at the daily chart. This one's just breaking down below this uptrend line on the daily chart. You can see it just cracking today. So that one might provide an entry. First targets there around the 22.40-ish level, then around $21. And again, like I say, a lot of these trades, if I see the potential there in the charts for additional targets, I may very well add additional targets as the trades go. So if you see me put some of these up, number one, make room. If you like the sector, you agree with my analysis, and I put the first trade idea up, just keep in mind, if you want to allocate 20% of your portfolio to shorting the casino sectors, don't put that 20% in the first trade idea I put out there. At least that's not my preference. I take a shotgun approach, diversify, and again, that's why I'm giving you some of my favorite names. All of these won't make it. This is the very last one here, GDEN, Golden Entertainment. Nice uptrend line. Look at all these reactions. Reaction, almost a reaction there. Starting to crack under the uptrend line right now, but we do have horizontal support just below, and that's something I often mention. If I see a trend line break, now I actually took a starter position in this one because I think that level is going to go 1175, but it hasn't gone yet. There's been a few intraday pierces of that, but that's that's horizontal support. You can see it back here to the left. Pretty well defined. So if and when 1175 goes with the conviction, I think that one has a relatively swift move down to the first targets at 1089. For those of you new to the site, keep in mind I always set the price targets above the actual support levels. So this one has support at 1080. So I put the my buy to cover, or if I decide to take profits there, or if anybody else does, you do that. You just lessen the chances of missing a fill if the stock reverses just shy of support. And I would expect, after a reaction there, that stock to continue on down to the 957 level. So I set the second target right now at 968. And again, this one's one of my favorites. Let's see if there's anything else I wanted to cover on that. Yeah, let's just take a look at the weekly chart and we'll wrap it up. Here's a weekly chart, 10 years going back once again. And without exception, I've circled all the overbought readings. Overbought, again, on a weekly RSI, you have 70. Anytime you hit or exceed 70, that's considered overbought. Anytime you hit or exceed 30, that's oversold. And, these cut both ways. You look at the oversold readings and just pull this chart up on your own. Follow prices up. These are very simple and effective ways to they're not exact timing indicators when you're using the weekly chart, but for trends to position and try to get a feel for how far that stock can go. You can see what happened every time the stock was oversold. Huge rallies. I mean, we're talking. There's a gain of what is that? 100 and I didn't even hit the bottom there. 180%. We were oversold there. The stock has so far went up about 118%, and it goes on and on. Now, what I've done here with the circles is I've marked all the overbought readings, 70 or more, and so that one was good from peak to trough. And again, I'm playing the peak to trough game. You're not going to always short the highs, and you're not going to always cover the lows, but it can give you an idea of how much these stocks can fall. There's an 85% drop roughly. Next time we became oversold, the stock dropped 51%. At this point, the stock dropped about 34%. From here, the stock dropped about 42%. This may not look like much, this last overbought reading, but it was still good for just in a few weeks, actually, a drop of 14%. I know most people would be very happy with a 14% trade. And here we are once again for the for the sixth time in at least the last decade. We are not only overbought, this is the most overbought the stock has ever been, and more importantly, in my opinion, it comes right on the heels of another overbought reading that really didn't have much of a correction. So I really consider this an extended overbought period, extreme overbought period. All this overbought reading did is bring us back down to this trend line. Now we're about to crack, so I really like this trade. I can see what looks to me like a buying climax. You see this surge in volume right here. They call that a buying climax. You have a well-defined weekly uptrend line. You can see what happened every other time. I've put these uptrend lines here. You can see what happened each time these uptrend lines cracked. It doesn't get any better than this, in my opinion, folks. So there's a stock that you could put a short trade on and look for, probably a drop. Again, we'll have to use the daily and weekly charts. I don't have all the price targets set here, but at minimum right now, that's my minimum target there, 968, which is still good for a drop of, roughly close to 20%. All right, that's it. So I'll go ahead and put some of these up as official trade ideas soon, but I like to get the videos out there ahead of time so you can review these charts and take any of the trades that you like, even if it's not an official trade idea. And this has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.